Hello everyone, welcome back to the second session. The session that we are going through today is books of accounts. Now, before getting into the details of books of accounts, let me just tell you what does this books of accounts means. So when we are saying accounts, so accounting normally runs through a long process and different kinds of books will be there where we record our transactions, and all of these books put together are called books of accounts. Okay, now getting into the details. So to record a transaction, we need to understand how the transaction flows. Okay, and prior to that, we first need to understand what is a transaction and how do we identify a transaction. So as I said in my earlier video, like if you want to say something a transaction, then it must be recorded or could be measured in terms of monetary unit. Okay. So primarily to say a transaction is a particular type of event, okay, that can be expressed or measured in terms of event, in terms of money or the business monetary unit. Only then that can be called as a transaction. So which basically relates back to your money measurement concept which we had discussed in our earlier slides or earlier video probably. So the next important concept before we understand what is a transaction is your recording the transaction is your double entry system, or which is basically related to the other aspect that we had discussed is the dual aspect. So whereby what we are saying is each and every transaction will have two legs to that. So one will be your assets, one will be your liability, or two can be from assets and two can also be from the liability, but it must have two sides of to have a transaction to be completed and recorded. Okay, so how does this flow normally? So normally every transaction travels through a journey which starts basically from journal. Okay. The journal, when we record our transaction into journal, that get translated into ledger, which moves into trial balance. From there it goes to profit and loss account and balance sheet. Normally when in your outside world, when you would have seen business finances, everyone talks about balance sheet, profit and loss account, balance sheet, profit and loss account. But to have your profit and loss account and balance sheet in front of you, every transaction must flow through journal till balance sheet. So it normally travels through the process of journal, ledger, trial balance and profit and loss account, ultimate balance sheet. Now how do we record our transactions? So this is what we were talking about earlier. Every transaction will have two aspects to that. So one will be your capital or liabilities, or the other side will be assets. Okay, or it can also have only two assets or only two liabilities. Okay, and most commonly you would have heard of this word as debits and credits. Okay, whenever you are keep talking about the finances, you would have heard this word debit and credit. So what is this debit and what is it credit? So when you understand what is your liability and what is your assets, so any increase in your left side, so probably what I've done is here, capital plus liability equal to the total assets, which is the normal universal truth. Okay, so I have taken capital plus liability on my left side and the total assets on your right side, which basically is your liabilities equal to assets. So that's what I have mentioned here is increase in your left side. So that means basically increase in your capital or liabilities, we can term it as credits. At the same time, increase in your right side, that is your total assets, we term it as debits. Similarly, the vice versa is also true. Okay, and now, how do we classify the accounts? So to record any transaction, once we understand what is a debit and what is a credit, we cannot just go ahead and directly record a transaction on your journal book. Okay. There are certain other set of assumptions or guidelines that we need to follow. So basically, we need to classify any of your transaction into different accounts. To understand what kind of accounts that we have, we must need to see what all the accounts that we have in in our accounting system. First and foremost is the personal account. Personal account is nothing but the account which is basically we can which kind of represents a person. Okay, so it can be a customer, it can be a supplier, it can be a creditor, it can be a bank, or it can be an owner. Basically which appears to be like a person is your personal account. The next account that we have is your real account. Now what is this real account is? A real account is nothing but basically your assets or properties, okay, which are basically your land, building, plant, cash, those kind of things. So on an overall basis, if you want to see, then you can see, any item that we can see or feel physically, those are the ones that can be classified into real accounts. Okay. Now, the third one is your nominal account. So what is this nominal account? Nominal account is nothing but the incomes and expenses or the gains and losses. Those are classified into your nominal accounts. Okay. Now, once we classify the accounts into either of these accounts, any transaction that we categorize, so you first identify the legs of the transaction and then you categorize that into the either of these accounts. Once we classify that into these accounts, how do we record them? Is there any rule to that? Is there any guidelines to that? Yes, there is a set guidelines to that for each of these accounts. Now, for personal account, the thumb rule is debit the receiver and credit the giver. Okay, so what I'm saying, the the account of the person who receives something should be debited and credit the account of the person who gives something. Okay, that's what it clearly says: debit the receiver and credit the giver. So what is the real account now? What is the rule for that? Debit what comes in and credit what goes out. Okay, so basically it says that debit the account of the asset or property which comes into the business or any addition to that. Okay, at the same time credit which goes out of the business. Now what is the nominal account rule? That is debit all expenses and losses and credit all incomes and gains. It's a very self-explanatory sentence for you. Okay, and these are nothing but the across the world, the entire accounting system is based on these rules, and these are called the golden rules of accounting. So you must be very clear with these golden rules. So if you are very clear with these golden rules, then it becomes very easy to go into the advanced stages of your accounting principles. Okay, just to summarize, I've tried putting down these points into a summary view, which gives like what account wise. So if it's a personal account, it's a debit the receiver, credit the giver. Real account what comes in, debit what comes in, credit what goes out. Nominal account, debit the expenses and losses, and credit the incomes and gains. Hope this is very clear, but make sure you understand this very clearly, and if required by heart this, because these are the rules on which the entire accounting system across the world is based upon. Now just to be very clear on this, how do we understand which accounts, how do we classify them into accounts, and how do we uh, put them under these rules? I have tried putting down some examples onto that. So I've taken one example. The first one is Mr. A started business with rupees 50,000. So what are the accounts that are involved here? So I see that we have cash involved into that. So cash is a real account which you can see, feel, right? So that is your real accounts, and the rule for that real account is debit what comes in. So for the business, the cash is coming into the business. So that's why we are saying we will debit the cash, and the rule is debit whatever comes in. So and that's an incoming thing. So we are debiting cash. Okay, and capital. So because Mr. A has provided that as a capital investment, so we are saying that is a capital account is involved into that, and that is what, that is a personal account, and Mr. A has given. So and as per the rule for the personal account, what is that? debit the receiver and credit the giver, and Mr. A here is as in terms of the capital account is giving it, that's why we are crediting the giver. So here debit cash and credit capital account. The other account that I have taken is purchased goods for rupees 10,000. So what is happening here? There are two accounts involved again here. One is your purchase account, the other one is your cash account, like the previous example. So here again cash is going out. So when we are saying in the real account, we are saying going out, that means credit. Okay, and purchase account is a nominal account and it's an expense that we have purchased the goods, it's an expense. So as per the rule of the nominal account, all expenses and losses should be debited, that's why we are debiting the purchase account. Let's go for another example. Sold goods for cash for 15,000. So here again there are two accounts involved. One is your cash account, which is again a real account, and as per the rule it should be debited. And sales account, it's again a nominal account. As per the rule of the nominal account, credit all incomes and gains, and sales is an income for us, so we are crediting that. Let's go for one more example. Sold goods to B for rupees 6,000. So here B is the person who is receiving the good, and it's a personal account, so we are debiting the receiver. So we are debiting B account, and sales has happened and it's a nominal account, so we are crediting sales account. Okay, hope this is very clear to you. Now let's try to understand the ruling of the journal and how do we record it. So journal is nothing but, it's the first book on which we record a transaction. So any transaction, when I said, it has to start from journal to reach to balance sheet or profit and loss account. So to reach to that ultimate point, it must start from journal. Without journal, it cannot flow through any of these books. Okay. And that's why we call it as a book of original entry. And the normal thumb rule is every journal entry should be recorded in chronological order. Basically means date and time wise. Okay. So what is the format? Is there a particular format where we can record a transaction in terms of journals? Yes. Here I've tried to show you a very brief example of the format. So here, as I said, the first column represents the date, whereby it relates to the third point, recorded in chronological order. So that means you need to mention the date here. Then the particulars, then LF, then amount, and then amount. So first amount is your debit amount, second amount is your credit amount. Okay. Now date, it's very clear, like what is the date on which the transaction would have taken place. That's the date we are trying to record here. In terms of particulars, that's where we need to mention which are the accounts which we identified, which is real account, personal account, nominal account, and we name those accounts. So those are the accounts that we need to mention here in terms of particulars. So whichever account we are writing debiting, that's the account we will write first, and then the crediting account. Okay, and amount for the debit account will be on the debit amount column, and amount for the credit account will be the credit amount column. Okay, so now irrespective of whatever transaction that we are posting, since it will have a debit and a credit, we first need to register the debit transaction, then the subsequent one will be your credit transaction. So that's why we write it as account debited to account credited. That means, and this is how the style it should be for any journal entry to be recorded. So we write it as account, and the debit that we should be writing it on the same box on the right side top corner, we need to write it as debit, and the corresponding credit of that account should start with 2. That's why I've highlighted it in other color so that it catches our eye. So that means it should start with 2. Okay, to account to the other account where we are crediting, and we are writing it as CR, which means credit. And there should be a small summary note which should be able to, when the moment you see the journal entry, you should be able to understand what kind of transaction is that. That's what we need to write it here, and this should start with being. Okay, it should start with being. Say for example, if I want to relate it to my previous example of cash being introduced, so what would I write? cash to capital, cash account debited to capital account, and here I would write it as being capital introduced to business. Okay. Now, this is a very simple example that I gave where we have got only two legs and the transaction is complete. But there are scenarios, and which is very prominently happening scenarios, which will be like, which are called as the compound journal entries, whereby what happens, there will be more than two accounts that will be involved in a particular transaction. Okay, so irrespective of more two accounts involved, you must, the rule is that the total of your debit must always be equal to your total of your credit, and the debit must be recorded first before your credit. Okay, just to cite an example, suppose we have bought some goods, okay, from a vendor, and we have agreed with the vendor saying that, we will pay you half in cash and half in credit in future period, or maybe some 1 month later, or we're taking it in credit. So that way we are involving three legs into three accounts into that. So one is you are getting your goods, you are getting your cash, and also you are increasing your liability of credits or loans. That way you are involving three accounts into that, but your total value of what you are receiving and what you're giving doesn't change. So that way your total amount of credit and total amount of your debit does not change, and every time it should match. So that's the ruling that we must remember always whenever we are trying to record a journal entry. Now, when I told you like when we start the flow, so first we record it in journal, then which moves into your ledger. So what is this ledger now? So ledger is nothing but it's a principle of book of accounts. So to summarize in a normal view, to give you a summary point of view, what it means is ledger is nothing but a summary of your accounts. Say for example, in journals you have recorded three journal entries whereby you have involved cash account, cash account, and cash account. So to understand how much of cash you have recorded, three journal entries, and all the three journal entries involves cash account in that. So one may be debit, one in other maybe it can be credit, in other maybe it will be debit again. So to understand what is the total cash that I have spent or that I have got, or what is my total cash balance, I need to look into the ledger. So ledger is nothing but it's a summary view of the journal entries. So how does it look normally? So journal, the ledger we normally try to record it in a T format. So whereby we will have a left side, also at the same time we will have a right side. So the left side we will say it as debits, and the right side we will say it as a credits. Okay, if I have to go back to my previous slides, then if you remember on the journal entry, then when we had passed there, one we had mentioned one column as LF. So similarly, when we are registering a ledger, that's where we will mention one column as JF. So in the journal, the LF represents the ledger folio, and in the ledger, the JF represents the journal folio, which basically means they are cross checking each other, or it's an easy, for your easy identification we need to mention the journal folio so that you can directly go to that particular journal folio and refer back to the transaction. Similarly, what we had in your journal folio, that we had mentioned the ledger folio, from there you will directly reach out to the ledger book and understand that particular ledger folio. The other basic requirements that we had was the debits, particular amount. Those are the basic things that we already had it in your journal. The same thing that we recorded it in the ledger folio as well, in the ledger details. But the only thing that we need to keep in mind is here the left side is debit and the right side is the credit. And this is the title of the account. So which means now all the cash accounts of your, all the cash journals will be recorded or summarized in this particular ledger book. Now, the other very important aspect that we need to keep in mind is the balancing of ledger accounts. Similar to what we spoke in our journal, where we said your total debit of your journal should always be equal to your total credit of your journal. Similarly, your total debit of your ledger should also be equal to your total credit of your ledger. But the difference here is in journal, as from the transaction point of view, your total debits and credits will match. But since citing back to my previous example of three transactions recorded as a journal, and it involves three cash transactions, three different scenarios. So need not be all the three offsetting each other, whereby I'll have the total of debit cash equal to total of credit cash. Not necessarily. If that's what it happens, then we will have a zero balance of cash. So it doesn't give you any right picture. So in Laserfolio, what we do is we summarize that account, but summarize your journal entries into this: the total debits here and the total credits here, the total debits on your left side and the total credits on your right side, and the balancing figure that we see, the higher of the left side or the right side, whatever the balancing figure that we see, that becomes your balance of that particular ledger account. But we need to mention that as a saying, no, that is the balance amount remaining, and in a total basis we need to show it as a total amount matches on your left to right. But this is the balance amount. To match this total left to right or right to left, I have inserted another line item which says, this is the total balance to match the totals. Okay, now let's go into a practical example where we try to understand how we record a journal and from journal to ledger. Okay. So here I have taken a very simple example of cash introduced to business for rupees 10,000 rupees. So how do I record a transaction here in the journal? Okay. So in journal, and as per the date, I have taken just a vague date which is like 9th July 1997. So on this particular date, this transaction happened. Cash introduced to business of rupees 10,000. So here I am getting a cash, the business is getting cash. So that's why I have debited cash account for rupees 10,000. At the same time, to capital credit rupees 10,000, and I have narrated saying being capital introduced. So this gives me a brief idea saying what this transaction is all about. And I've mentioned the Laserfolio from which I'll see the ledger. I'll go back to the ledger and I can identify the Laserfolios from there, so that I can directly refer back to this transaction on the ledger. Instead of running through all the pages, I can directly go back to that Laserfolio and I can identify that. Now to translate this into a ledger, how does it look like? As I had mentioned, whatever accounts that we have in your journal are the same accounts that we need to maintain a ledger as well. So here I see cash account and capital account. So I need to create two accounts. One will be your cash account, one will be your capital account. So I've created two accounts, ledger accounts, cash account and capital account. Here, how do I record it now? Here you see it's 9th July 1997. So similarly, I need to mention the same date because it should relate back to each other. So I have mentioned the same date of 9th July 1997 here. Okay. Similarly, now let's see. I am writing I'm trying to record the journal entry into my ledger books for cash account. So how do I record that? Since in my cash account it's a debit, right? It's a debit of cash account. So that's why in my cash account I will go back and write it as, on the debit side I will write it as to capital. Okay, always keep in mind that in the T format, like we mentioned in the cash to, here we need to mention to. Similarly in Laserfolio as well, when we are writing on the debit side we need to write it as to, and when we are writing on the credit side we need to write it as by. Okay, so that's why what I have done it is here cash account, I am writing the cash ledger and I mentioned as to capital of 10,000 rupees. Similarly, when I'm writing the capital account, when I'm going back to my capital account, what I need to write is, because it's a credit, I'm going towards my credit side and I'm writing as cash account the opposite account. Basically what we do is we will go back to the side of the account whichever account is credited or debited, and we will mention the opposite account of that particular transaction. Okay, that's why if you want to be very to repeat this, when I went into my cash account, I wrote it as to capital, because in my cash account, cash ledger, the other opposite account was the capital account. But when I'm going to my capital account, the opposite account is the cash account. But capital account was credited, so I am writing it as on the credit side, and cash account was on the debit side. That's why I'm writing it on the debit side. And as per the rule, when I'm writing it on the debit side, I will write it as to, and when I'm writing it on my credit side, I will write it as by. Okay, and when I was talking to you earlier as the laser balancing, so what I was basically referring to this is I have a 10k as my balance in the cash account and 10k as the balance in my capital account as well. But at the end of the day, these two accounts should, the debit and credit should always match. So what I did is I mentioned as by balance carried down by 10,000 so that my total debit and total credit matches. Similarly here, because my balance was on the credit side, I wrote it on the debit side saying to balance carried down, which is 10,000 again. So that way my total debit and total credit matches when I'm closing my books. And when I have to open my books again, say for example, this is what I'm recording on the end of the month. Okay, when I'm reopening my books on the first of the next month, what will happen is this capital of balance or this balance that we are seeing on the cash account, whatever credit balance that we are seeing in the cash account, that will become an opening balance for me in the cash account on the first of the month when I reopen my books. Similarly, on my capital accounts, what I'm seeing in the to balance will become an opening balance for me on my right side of the capital account. Okay, so that's what we have for this video for now, which is like journal to leisure. Hope you like this video. Please share your comments and thank you so much for watching.